Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, got another question on the comment or question on the reverse. You want trending market with high volatility if you're selling the option. Right, that's very true. Because I don't write premium or sell options, then, that's why I'm not talking about that. But by the way, yes, that's absolutely true. For those of you that like to write premium, a lot of what I'm talking about here will work. You don't want to be writing premium necessarily in quiet markets. You're not going to get a lot of, return there. Your risk is obviously, however I don't want to, actually I should hesitate to speak in such broad generalizations because different option strategies take advantage of volatility in different ways. But yes, and generally speaking, Paresh, you're right. On the reverse side of things, you want high volatility when you're selling them. And that's typically, yes, the rule of thumb. Okay, got another question here or comment. How do I match the timing of my analysis with the expiration of the option, which on a monthly basis? Well, like I said, I think you need to understand what average pip movement is. And there's a great website that you can check out that gives you an idea of what average pip movement is in different pairs and also by hour of day. Now, I don't know that you need to get as zoomed in as hour of day, but one of the things that I know a lot of traders are interested in is what type of volatility and what time does this volatility usually rear its head. And I have a terrific resource here for you for that, which is a tool called AutoChartist. And if you head on over to autochartist.com, you'll see there is a link for PowerStats Basic. Again, you're looking for PowerStats Basic. On the website is www.autochartist.com, autochartist.com. Look at the PowerStats Basic. That's what you're looking to utilize. And that PowerStats Basic will give you an idea of typical hour-by-hour and also daily volatility. So if you know, on average, say, the euro-US dollar moves X per day, and you know that based upon your spot, your target is maybe X pips away, you can get an idea of how much time it might take to get there. Now, that doesn't always work. I think the best way to do it, since you're looking at support and resistance, is look at past movement and the way the market has been moving. I can see that a move from 98 to 94 can happen as quickly as 2 or 3 sessions on the dollar-yen, which is what we have on the screen right now. So, to me, again, I don't, for the most part, the next expiration is what, the 18th of April for the YUK. If I'm looking at a very short-term strike, one that's very, very nearby, probably less than 300 pips. I'd say maybe less than 200 to 400 pips. I would really shudder for you to use the April 18th option. I'd rather you give yourself some time and maybe move out to the May 16th expiration. Okay. If you're looking at that 90 to 88, I'm talking about a much larger move. As I mentioned before, you might want to look at September or December. So, you got to look at what kind of movement you're expecting and where your strike is at, and give yourself enough time for price action to get to your strike. Okay? So that's a little bit of common sense. That's also understanding and looking at the volatility of the market, how it's moved when that spring does uncoil. Because you notice when that spring does uncoil, it can do so in a very quick way, and that's the volatility that we want to capitalize on. Okay, so let's see what else we have here. If the 200-period SMA is powerfully broken to the upside, what criteria would I use to exit the put option? Okay, so what if this trade goes against us? Great question, Mike. And if this trade does go against us, I don't believe in necessarily letting my options go to cabinet. I don't need to wait for them to expire or go worthless. I'm not saying you need to put a stop loss on them, but you could. If my trade is no longer valid which would be in the way you described exactly, when if and when the 200 SMA or the 100 level on the spot is broken. If you translate that to the YUK here, if prices basically break up through 100 on the YUK, I'll probably go ahead and just, sell my, liquidate my option. I don't want to use the word sell. I would go ahead and liquidate my option. So I do, in many ways, have a validity point or a stop loss, in a sense, on my positions. And that's basically what I'm going to do. I'm going to look for that resistance at 100, look for that resistance at the 200 SMA to be broken. I'll probably let the market wiggle around as high as maybe 100.20, maybe 100.50. Anything beyond that, I'm going to go ahead and liquidate. That's where I would liquidate the put. Okay? So thank you for that question, Mike. That was a great question. Is there a specific volatility index for a specific FX pair? Yes. When you go to ISE.com/FX, you will see the historical volatility, the current reading, and you will see the 52-week high and low. So yes, there is a specific volatility reading for each pair, as well as a 52-week high-low range for each pair. I mentioned the CDD not too long ago because the CDD right now is a reflection of what's happening in the dollar Canada, which is moving because of the crude oil market. And if I take that over to the dollar Canada, here's the dollar Canada daily chart. You can see the move higher. This is the Canadian dollar losing ground against the U.S. dollar index as crude oil was piercing down below 50. You can see crude oil is kind of stabilized, and as the chart of the dollar Canada has, you can see here, crude oil is actually heading back to the wave and sitting flat. To today is kind of a range-bound day. We're not really moving much higher or much lower. We might end up with a doji candle today on crude oil, which is kind of like hitting the pause button on the 2-session sell-off we've seen here. So the dollar Canada is kind of getting quiet right now. Now you look at the CDD, which is now the symbol for the option of the dollar Canada. You can see that the CDD was moving up higher with the weakness in crude, which was reflective of a weaker loonie versus the greenback. And by the way, the dollar index isn't that strong right now. But when crude oil sells off, that affects the loonie, the Canadian dollar itself, in such a way that it begins to slide against the dollar index typically, and you get this move higher on the CDD as well as the dollar Canada. So when I get that move higher, what I'd like to see here, by the way, now is another cluster develop. Okay, you can see the cluster that developed down here. Well, I'd like to see another cluster develop, and I'll start shopping put in call options, and I'll determine which way I think the market's going to move. By the way, if you have no clue as to which way the market's going to move, maybe the trend of the underlying market is moving sideways. In those situations, I don't mind purchasing both a put and call because I'm really looking at a momentum environment where I may not know which way the market's going to move. Sometimes I'll use the MACD to help me with a decision like that because that's the tool that I would use in my momentum trading if I was trading a triangle pattern or a rectangle pattern or something like that. Okay?
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.